The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
Anywhere on your mobile phone at TFNN.mobi. And right now, where we at? We got the S&P. It is down 8.75 points on the day right now. We got the Russell is currently down 5 points on the day. And let's look at the other indices as well. Right now, we got the Nasdaq also down 5 with the Dow down 47. So we'll check out some of that news that came out this morning. We'll go through everything, look at the stuff from last night here in just a moment. We got natural gas currently flat on the day. We got corn up just a few points on the day. Not a big move on corn today, but soybeans is just rocking and rolling up over 1%. Euro dollar currently up 76 pips. And we got the pound dollar is up 15 pips. Dollar CAD down 51 with dollar franc down 68. Euro yen is also up 2 pips on the day with the pound yen down 97 pips and the U.S. yen down 61 pips on the day. And so Aussie dollar being the big mover, the champion mover of the day, really made most of that move last night based on the Aussie dollar news. We talked about the news and the stuff that you need to be aware of on your trades that you do. And you got to be aware of those fundamentals. And the fundamentals let you know what to focus on. One of the questions I get all the time from traders is, what should I trade? What market should I trade? Well, one, you should just learn how to trade, obviously. Two, you need to have a system for trading that you can apply to all markets. All right. And then three is you need to learn how to focus on what to trade that day. You need to have your synchronized battle plan. So what is going to be moving and why? And doesn't mean you know whether it's going to go up or down. You're going to follow the charts. Okay? But using news lets you know what's going to move. People ask me, like, what FX pair to trade? I'm like, well, what FX news is coming out today? And I'll tell you what to trade today. Okay? So that means I use that to let me know where I expect there to be the volatility. So I can ideally take advantage of the volatility. And we've had some crazy volatility on a few things. Like the pound has been nuts today. Just the massive moves up and down, up and down. Aussie dollar is screaming up right now. It, who knows, man? It's going. We may keep watching this thing. It may keep rising. I figured it was going to stop by now. It's right up there. We'll go back. We'll look at it and see what kind of support we got there and see if we have any justification for continued rising in the market. But it is definitely looking like it might want to go higher. We'll see. It's really been battling right at this level. And I don't know. We'll pull it up in just a moment. Let's also go ahead and check out. We got gold currently up 6 points on the day. We got silver is down or up about 0.5%. So, and then we got copper is the big mover. It's up over 1%, almost 1.25% right there. So you got a little copper. So beating out gold and silver on the day. Let's go in and let's pull up some charts. Let's check it out and see what we got. So first thing, I'm going to just zoom right on in. Just to the Aussie dollar. I'm gonna back on out and look at what we got just over the past couple weeks. This has been a pretty major level. So right here at the 92 range, you can see just a pretty big battle going on. Market came down, sort of hesitated, broke through, bouncing off that, came on, used that as resistance for about a week, an entire week right there. Broke through it. Now it's support. Comes back down, bounces off of it again. Here, it doesn't really, I guess, maintains its support status because it sort of flies above it, goes back below it, and then comes back above it again. And so right there, we see that continued, trading style that we can use, but just right there, we're just right at that same resistance level. And I sold some 9240s earlier that expired at 11 o'clock just because I figured it would stay below that level. And it's pretty much staying below it. It did bust above it just a little bit recently right here. And but it's starting to move back on down. And let's see, how does that compare to our deviation levels for the day? So we always want to be looking at those deviations and see if can we use them to our advantage each and every day when we're placing our trades. So right now we're starting to see, I just got dollar CAD up by chance. I'm going to go right to the Aussie dollar, but notice how it hit one deviation and bounced off of it. So it's right there at that one deviation mark. That's a good clue for you. The dollar CAD probably could be done for the day. Probably not a place to really add into your shorts. And, obviously we've tightened our stops. Their tighten stop method that I teach, where we go in and when the bar closes below a deviation, we look at that. But we'll come back to dollar CAD here in a minute. Let's pull up Aussie dollar. That's sort of the topic of the moment. And, all right, so check this out. We're above one deviations. We broke that like early, last night, pretty quick actually on the news. Flew on up, and then it oscillated. It took a few hours before it finally hit the one, and then it waited for the European session. It sort of took a couple hours, woke up, went on up, hit the 1.5, and so we are actually past that 1.5 deviation level, and 92.64 now being the next major area of resistance. But just looking back, like I said, over history, we can see just an area where the markets had a lot of basically a big battle zone right here. And again, if I back on out on this chart, just so you can really see it, you can really see that battle zone happening in this range. Now, battle zone is not a line, okay? It really is a range. And so you can just look on here and you sort of see where does the market stop over and over again and bounce over and over again. And so, this was a range right here. And I'm sure if we go in and we do our classics, let's see if we can pull some of this out. Let me back out a little bit further on this. And, oh yeah, look at that. Wow. Aussie dollar's just been getting nailed down there, right? So we pull in some Fibonacci retracements. We go grab the high. And we go on down to the low. All right. So that gives us one level of fibs right there that we can just look at. And then we go over here. And so we can see, we're really in between this zone. And you can see how it came down to this fib level, bounced off of it, came back up to this fib, bounced off of it, went on. Obviously, it hit this fib level because it's the zero line, so it's always going to hit the bottom line. And so, that shows you that this is the true battle range we got, 93.77 to 9,000. So that's a 377-point range, though. So that may not be as helpful as you want it to be. And so you can also, go in and you can take different peaks in different areas. So we can, go from here to here. I'll draw different ones and sort of look at them. And I'll see just where I get confluence on, different zones. So I'll take a zone from here to here, and then I'll take another zone from here down to, here, and I start lining it up. It gets really hard to see anything. But when you zoom in on the chart, you can see, are there any areas that are really, lining up over and over and over again, and with just some high levels. And so let's look at, what do we got, 91.83. It's like right there, it's, our level. For our deviations for the day. This is why I get a little confused sometimes when I do fibs, because I do too many of them. And then, did that happen to anybody else, or is that just me, right? And we'll go up to 92.23, and so it'll be like right up here. That's our next deviation level. So that actually does show some major support right there. We got fib levels lining up with deviations. And then we got this last high, and it just becomes too many levels. So, you know me, I'm not using the deviations that, or the fibs that much, because the best ones, there are the good ones for me. The good ones right here are going to be the high to the low. So literally, you take the most recent high, which is way up here back in December, all the way down to the low, and that's going to give you your best fib levels, because that's what you need. You need to see what kind of true retracements do we have. And that's the way that I like to use them. And so I'll mainly use the high to the low right there, so that way it gives me those solid ranges of where, if it breaks through, where I expect it to keep going or where I expect it to bounce back up to. And so right now, we could drive on up to 93.80, and it also could easily take to the end of the week for it to get there. And I think today, we're going to finish below 93.40. I think it's still going to stay below that price point. So just it's really been trying to hit it over and over. And like I said, if I go in and I really look at it, we can just see how much it's been playing with that range. And we've only broken through it once. And one of the things you can do, a lot of Forex traders don't think about this. And I think it's really important that you do think about it, is you need to look at your futures on Forex, because they give you something that you don't get on your spot. What do they give you? They give you the ability to look at volume. Okay? So we can go in here, and we can look at a comparable chart, and we can look at where is the volume happening at, okay, for major, price levels. And, what is going to be that key volume level. So right here we can see that there was a major volume spike, 2,700 contracts, okay? And that was right here. So we get right on the right bar, right there. So we look at the high of that bar, and that's going to become the magnet price right now, okay? And notice how it comes down, it hits it again. It comes back down, it hits again. It breaks it, it comes right back down to it again. So that becomes the magnet price. Well, how do you translate that if you're a spot trader? What does that do for you? Well, just look at the difference between the futures and the Forex. So on the futures and the Forex, you're going to have a carry interest difference built into your trades. And so let's see here. We got, that seems like a big carry difference. But I'm going to check out one of my other charting programs just because that seems big. We got 92.37. Okay, that's accurate. Then let me go over here. And go over here. Wow. Okay. Well, there's 30 pips. Wow. That's a lot for September. But it's only 2 months away. It makes me want to go in there and look and see if there's some arbitrage between the futures and the Forex. But one of my favorite arbitrage trades I used to do back in the days when we had interest was I'd get a universal account, and where you could do futures and Forex in the same account. And then I'd go long the future and short the Forex when the carry was off by more than it was supposed to be at delivery date of the future contract. And so looking for things like this. But that may be like just spot on. So, but yeah, we have a 40 pip difference. So that difference is going to be always the same. So I go over here, or, for that day anyway. So I'll go over here and I'll look at this magnet price. Okay, 91.94. So basically I need to subtract like 40 pips over here from 91.94. Or add 40 pips. So I add 40 pips to 91.94. And it's a pretty simple thing to do. And also, of course, you can line up just the prices. But 91.94 plus 40 is going to give me, 92.34. So that means right here, which I bet, let's see, what is that, 750? Yep, see, it's right there. So 92.34, that's like 40 pips higher than the or the 950 bar over here. So we take their 750 bar, I guess. Oh, so they actually lined up a little bit differently. Let's see, 750, this is 955. So let's go over here to 955. We got a little, 92, yeah, there we go, 92.35. So 92.34, 92.35. So right there, that's our magnet price on spot, is 92.35. So I just used, I'll go back over how I did that when we come back, but it's a really helpful trick for helping you find those magnet prices if you're a spot trader by using the futures market. All right, we'll be right back after this.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so let's check it out. What I'm talking about is just looking at knowing what the magnet price is. And Tommy talks about this in his book, The Art of Timing the Trade. And what you do is you go and you find the high volume bar. Okay, so the recent high volume bar. And, well, there's a problem with that. What happens when you're trading spot Forex? Because if you see volume on your chart, you're probably not seeing real volume. Okay? You're seeing what's called tick volume, which means every time the price changes a tick, it counts volume to it. So that's what you're seeing. If you're looking like a NinjaTrader or MetaTrader, I want to say TradeStation, any of them, you're actually seeing the tick volume, not the actual volume traded. But if you look over at the futures market, okay, you can see the volume. And so I can see right here, we had a high volume bar right here. And we also had a high volume bar, earlier down here on this chart. Oh, there we go. Thought I had my chart on one screen, I had another. So like right here, we had about, the same high volume bar going on. And that became a volume price right there. So you can see it sort of came up, went right back down to that price, came up, and it's literally oscillated right over that magnet price before it finally broke free from it. What happened here? Okay, we've been oscillating right around this magnet price. Well, the prices are different between spot and futures. The reason is the interest that you get paid to you for carrying a spot trade, okay, has to be counted in the futures market, because you're saying, I'm going to buy the Aussie dollar and I'm going to sell the Aussie dollar and in a future date. And so they're going to have to count that interest in there, positive, negative, whatever, at the estimated value with the either interest added or interest deducted, because you get paid interest for owning the Aussie, and say you pay interest for borrowing the dollar, or you pay interest for buying the dollar, and then you got to okay, you get interest on the one that you loan, and you pay interest on the one that you borrow. So if I go and I say I want Aussies versus selling dollars, and so that interest is actually calculated into the futures contract itself. And that is why you have a difference between like Aussie dollar futures and Aussie dollar spot, or Aussie dollar, Euro dollar futures and Euro dollar spot. So, but on one day, they should stay pretty consistent, okay? Within like a few ticks of each other, they should be about the same difference all day for that day. I mean, you may have a couple tick variation. You got bid-ask spread, you got all the other stuff. But it's, like looking at bid to bid or mark to mark or ask to ask or whatever, they should be about the same throughout the day. Okay? So if I know that, then I can go, all right, well, what was the magnet price on the Aussie dollar futures? And I can go over here and I can look at, this bar, and I can go, okay, well, the magnet, it was an up closed bar. It was high volume. What's the up close? What's the high of this bar? The high of the bar is 91.94. What's the difference between the two contracts? Well, there's about a 40 pip difference on average. So if it's 91.94, then really what I need to do is add 40 pips to that. So I'm going to get 92.34. So I go over here and I find 92.34. So we'll delete all these other ones out of the way. So we got 92.34. And also I can even look at the same time. Like that's a 9.55 bar. So I can go over here to 9.55 and notice we also get that same high. So the charts look pretty similar. They're not going to be exactly the same, but they'll look pretty similar. And I can notice what's the high of this bar. The high of this bar is 92.35. Remember, what was I going for? I was going for 91.94 plus 40 pips, so 92.34, 92.35. We're basically right there, 92.34. So about a one tick difference on that. So what that lets me know is if I add 40 pips to this, if I'll take the 40 pip difference between the spot market and the futures market, find the magnet price on the future market, add that 40 pips in this case, because the spot market's priced 40 pips higher, then I'll know what the magnet price is on the spot. So if the magnet price on the future is 91.94, and there's a 40 pip difference between the future and the spot, then I add 40 pips, I get 92.34 on the spot market, and now I can also have that spot market magnet price that I can use. And like I said, you can see how it's been using that as a magnet price again and again and again. It keeps drawing itself right to this price. And as later in the day as it is, it's very likely that we'll see it just hang out right here. And we'll talk a little bit more about why that's a magnet price when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're going in basically right now, and we're just talking about the magnet price, okay? And how to understand the volume on the magnet price. And the magnet price being basically high volume bars at critical support resistance areas. And there's multiple facets to this, and definitely recommend Art of Timing the Trade by Tommy O'Brien to learn even more about it. But this is just one thing that I picked up that I use a lot, and it's the high volume. So when it gets up there, you get that high volume mark, and spot traders don't have this advantage because the volume is ticks. It's not actual volume. It's not quantity. And quantity matters, not how many times it ticks up and down. And but I've seen all sorts of interesting courses on that. But anyway, so right here we get this high volume bar, and then we got to calculate the difference between the two, and then we add that difference to the spot market, or subtract it, whichever it is. So in this case, spot is 40 pips higher than futures. And so since the high volume bar here at 9:55 on the 5-minute charts on the 6A September contract was at 91.94 as an up close bar, so we're going to use the high. And I've even seen people use the high and the low just sort of as a range for magnet, which I don't think is a bad idea either. And the idea behind that being, if you go 5 minutes, you may get up close. If you go 10 minutes, you may get a down close, so to give you a little bit of a range. But it's amazing how accurate it is. And so right here we see that the volume peaked. Why is this a magnet price? And by magnet, again, just think about the concept of it comes back to it over and over and over again. Okay? And so look at, why is that a magnet price? The reason that's a magnet price is that's where large positions were exited out of the trades. All right, so they got in, and you can sort of look over here. I mean, check this out. Okay, right here we have this massive high volume at down close right down here. And so there was a lot of sellers, buyers, whatever you want to call it, but there was exiting of positions. Probably the ones that bought last night, way down here. And the price will, by the way, come back down. This is one thing Tommy will talk about. It'll come back down to this point. It'll come back down to 91.20. Because that's just a massive high volume price. So that's another level it could come back and break down to. But these would be like three major areas that orders are located at. Just look at the volume. And the volume is definitely visible. Right here, right here. I'll maximize this chart for you. Go over here. You can just see, this volume is way above, like triple. In many cases, the average. And I've even went in and added indicators to like my volume just to see the average volume. But you can add literally like a moving average or whatever on there just to see the average volume on it. And looking at this right here, you can see, okay, so we got a magnet price, way down here. And obviously we have the ones over here. So we can go up. We had another magnet like right in this range right here. And then we had another magnet that formed right over here. Okay? So a lot of buying happened. Boom, boom, boom. Buyers, buyers, buyers. The market's flying up. And a little more accurate way to see if it'll let me edit that and bring it over here. So it's a little more accurate to show you where it started at. And then activate that one. Let me move that one over where we got it at. Okay. So buy. And then all of a sudden it starts meeting resistance, which is the same resistance we were talking about earlier. If we went back and looked on the charts, you'll see that. If I go back to, like, say, 60-minute charts or 4-hour charts, we'll see this whole resistance line. Look at that, like where it comes down and just oscillating right on this pivot area. Back up, back down, back up, back down. Just literally just like playing right around this whole zone. Okay? So we zoom on back in. Look on over here. They're buying it up, and start slowing down and going sideways. And then all of a sudden, this is where take profit. Okay? So accumulation, market starts rising, distribution happening right here. Market sells off. Comes the high volume point. Big boys are done. They're out. They're done for the day. Okay? It doesn't mean the market ain't going to move, but these are the guys who bought back here who are getting out here, like in this price zone. And so you go in and we got a few people go, okay, well, I'm going to sell. And guess what they did? What would you do? And I talk about this sometimes on the show. And this is what diagnostic trading is about. If you started seeing this massive move down and you were selling, all right, so you're like, okay, this thing, it's falling. Like, it's really going to go. And so you're like, I'm selling. It's going down. What's just a logical place to put your stop loss? Just tell me, what do you think is a logical place to put a stop? If I'm going to sell right here on the Aussie dollar, 91.68 area, right down here, because they're starting to break down, so I start taking advantage of that, and I'm short, a logical place would be right above the market high. It's right in this area. Okay? So you could say this little zone right here would be a logical area to have stop losses. And so you're a short trader, and somebody has some money. They go and they do another little. Notice this volume pickup right here. Look at that in comparison. This is a lot of volume. It's also, of course, the morning session. But so you got the volume pickup. You got all these short sellers trying to get on this big move down. It's going to go back down to the last magnet. They're all ready for it. And so what they do is they accumulate right here. That's what all this is like, selling, buying. This whole war. Stop losses. Some people are already getting kicked out like instantly, okay? And then the market starts picking on back up. And high volume. All right. This is the people getting out where they know the orders are going to be. not the breakout traders. These are the breakout traders right here. Okay, see a little volume spike right over here? That's the breakout traders. That's also a bunch of stop losses getting triggered. This is getting out one step ahead of the market, knowing that there will be enough orders to make a spike over here, knowing that there will be buy orders for breakout traders. There will be buy orders for short traders who are going to be taking stop losses. There's going to be a lot of those orders right there, breakouts and stop losses. So I'm going to buy into this, knowing that there will be plenty of orders in this zone to drive the market back up, and I am going to get out when it gets there. That's getting one step ahead. My confirmation on top of all that is I got a magnet price. So if I miss the exit and I see that and it comes back down and comes back up to that magnet price, I got another chance handed to me. Okay? Goes back down, I got another chance handed to me. Goes back up, goes back down. I have another chance handed to me. But it's playing right in that magnet zone, right where all those stop losses for short traders and breakouts and buy orders for breakout traders, both being buy orders, are going to be located. It doesn't mean the market's going to go higher. It means it's going to spike at that point. When it breaks that level, and it breaks that high, which we see right here, see this high level right here? When it breaks it, it's going to spike. And it did. So if we look here, I'll just put a few lines to make it really apparent which one I'm talking about. When it breaks this high, we get some increased volume for a couple bars there, and it spikes right through it. It doesn't mean those are buyers to take the market higher. It means there's just enough buyers right above that zone with all their stop losses and with all of their breakout trades. That's a great place right before that gets hit to start exiting or tightening stops or trailing stops, because all that means, it doesn't mean the market's going to fly higher. It means the market's going to spike higher and then probably flip back around in the other direction. And that's exactly what happens. It spikes higher, it hits all the stop losses, it hits all the breakout traders, and then it starts falling back. And, some of this is now them going, oh no, it's falling back. We've all been there. It's painful, right? It's coming back against me. You should have expected it to come back against you. If you're going to get in on this, you should have expected the spike, expected the pullback, and then waited for like maybe this bar. Okay, right here where it starts breaking the high to move back higher. And you didn't really get a high volume commitment. These are all things you can't see on the spot Forex market, okay? Because you can't see the volume. So even if you're a spot trader, and I'm not saying you need to become a futures trader. I prefer to trade futures or Forex on futures. But even if you want to trade spot, just go over and check it out and look at them side by side. Make sure you have your 6A chart up so you can see true volume while you're placing your trade. And then you can just, if you're trying to figure out like a magnet price, just see what's the difference between the future and the spot, and then add or subtract the difference to the spot so you'll know what that magnet price is, and you can actually still draw it over on your chart. So a little trick, very simple, very handy, and, we're just seeing this. This magnet price cannot be more magnetic. Look at this thing, just boom, 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 boom. But we never could have got this at a spot chart. So, I hope y'all will pick that up. You spot traders out there that are listening, you FX traders, you Nadex traders, okay, trading the spot market. You need to be looking at futures also so you can get the advantage of the volume for breakouts, for true breakouts versus false breakouts, for magnet prices, for different things like that. Make sure you're using your futures with your Forex trades. Don't ignore the futures market just because you're trading the spot FX. Okay, it's basically you're just giving up information. You're not doing diagnostic trading. You're not being one step ahead by going, how do volume traders look at the market? Okay, you may have the technicals. You may go, okay, well, they bought up here, and this is a sell-off, taking profits and distribution. This is a buyback. But, I know that story simply by looking at the volume. Okay, so volume really helps. Now, I don't use bar time-based charts in most of my trading for all my decisions, but I do use them for analysis, for diagnostic style analysis. Okay, so for my exact timing of entry and exit and everything else, that's not exactly how I do it. But what I do is I go, oh, you know what? That's probably an area where I need to be tightening my stops. And I should expect it to fall back. That also is an area where I may want to be really cautious about going long. So I get an entry to buy right up here, and I had a long entry signal, and I backed off of it on the Aussie dollar. Because I'm like, you know what, I think it's just going to bust up and then just oscillate right around here. It's going to be way too close. It's just not going to be worth it. So we're, right up there. We're just past a 1.5 deviation level. And, we're at a magnet price. So it's just going to be like suckered in right to that price the entire time, right around 92.35. And if I bought, I'd be looking at the 92.40. And, I sold it actually at 11. I'm like, that magnet price will hold. So I went and I sold it and got in it, and it worked out pretty well. But right over here to expire below that at 11, and it sort of came right up to 92.35, and then that's when I sold it. It dropped down, took advantage of that. And you could do the same thing. So as the hour approaches, you could look at, what binary is close that you could possibly sell for premium collection. You could look at butterflies around magnet prices. Okay, so magnet price butterfly trading, something that I've been looking at. I haven't discussed it a whole lot on the air on the webinars that I do yet, but it's a pretty cool thing that you can take advantage of. And let's see here. So with that wrapped up, you got magnet prices. We can go in. You can look at all different markets to find, magnet levels. The Russell. I mean, you want to talk about knowing when they're done trading for the day? You'll see the dump in the right here. Look at this. You'll see this volume spike happen. Usually like somewhere around 11 or post 11 o'clock. And right here. So they're selling. It pops up. They're selling. And so right here, you start seeing this volume spikes. And if we go to a little bit bigger bars, we might be able to see a little bit better. You hop up 10, 15-minute bars, but I'm looking for the biggest spike. And if you can't see it, change your time frame so you can really see it on there. Because, there's not as much noise on, like, say, the Russell if they're on ES as far as volume goes. There you go. So 10 minutes, which is my usually preferred method. Y'all know that if you listen to me. And you can see right here, like at 10-minute bars, you start seeing this volume, like the volume's picking up and spiking, but this is a definite spike, right? This is like, sort of a slump and an increase and slump and increase. We're getting a little bit lower. We're rising on lower volume, and then we just spike. All right, so that spike. So Angie talked about we should get a bounce right now. She's talking about the indices over there in the Tiger's Den. That would be why. Right there. See that Russell with that massive spike? They just unloaded. Who's they? The market movers, the big boys, They just unloaded their positions that they've been short all morning, and they bottomed back. So as all these sell orders are coming in, these breakout traders are coming in, these short traders are coming in, they're done. They're buying them back, and we get a bounce. Now, does that mean the market's going to just fly up all day long? No. What it does mean is tighten your stop, and if you do want to go for a short scalp trade, you can, but do it with a very, very, very tight stop loss, okay, like a 1-point type stop loss. And so there are ways to trade that, take advantage of that. But, that right there, that volume spike, and that's very helpful. And I notice it personally more. We can look at a couple of the other indices with it. I noticed that volume spike, which becomes, by the way, what? A magnet price, okay? I noticed that more on the Russell than I do on the other indices. And I think just because of the liquidity on the Russell. And so, but we can look at that, and remember, magnet price. So it probably will come back down and touch it. Okay, so it doesn't just mean go long all day if you are trying to fade the market there, if you're a contrarian trader. But it does mean expect a bounce, and we got one, and we got a solid 2 or 3 point bounce right there. So that's what I saw. That led me to believe that bounce will be coming into play. And we'll look at a couple of the other indices when we get back to see how much they may have lined up as well. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. So one thing that you can look at, that you can understand right here, is we had that high volume spike on all four, and I was really shocked. I didn't expect to see it on all four of them so clear. On all four indices. So on the Dow, on the Russell, on the Nasdaq, on the S&P, right here on this high volume, and it wasn't like high volume compared to the whole day, it was high volume compared to everything around it. So we had the morning volume, then the little lunch lull, but look at that massive spike right there, same thing, massive spike, again, massive spike, again right here over ES, massive spike. This is unloading of positions. This is I'm going to lunch, I'm going home, I'll see you later, okay? That's what's happening right there, and that's why we got that pop reversal. Now, does it mean the market's going to go the other direction? We don't know. What it does mean is that we should expect the market to pop up, and it's a very good style analysis of a way to go, you know what, it's probably time to take some profit, or ideally, I prefer to trail stops versus take profit. So, because you never know what might actually be available. And so with that, what could you do with this information? Do you have any expectations of how you could use it? Well, when you see it, there's a lot of ways. One, of course, you could buy a spread, you could buy a binary. You could also look at in-the-money binaries. You could go into a premium collection binary right when that happens. You would have had plenty of time, 12:10. You could have done like a 1 o'clock and went in and bought, say, like at 75, below the market there. And, have a stop loss if it keeps going down, get out at 50. But you can use these volume spikes as just a great, great way to not only know where magnet prices are, where the market's going to be drawn back to, but also to know where you should expect bounces in the market, because those bounces are what scare you. and they can sort of freak you out. So, it's always very, very wise to know, like I said, how to read the market, how to read the volume. And when I see a dip in volume and a spike in volume after a strong move, I expect the market to do a bounce. And now I'll look at, the market has to give me a confirmation to do totally trend-wise the other way. But I could do a scalp trade. I could do a premium collection trade. So I could do, shorter, going in for 25 points, maybe 5 points on the S&P at most. But, you're really talking probably 2 to 3 points, maybe 20 or 30 points on the Dow. And, maybe 2 or 3 points on the other two indices as well. So going in there and just, grab a quick spike trade. And if you see something to justify it, you can keep, you could trail it. But it's a nice, easy, quick spike trade, and you'll see it happen over and over and over and over again when you got that volume just exploding right there after a big move, especially this time of day. Okay? Like right now, that's when I'm looking for it. And you can go in, you can look at previous days, and you look for that same spike, and sometime around the lunch hour. And if you can see it on all four, that's a great confirmation. That is the confluence you love to see. You're not always going to get it. So, ideally, if you can get that spike, if you can get it, it's going to become a magnet price. If you can get it on all four indices at the same time, it's that much better. And, just learn to start watching for it. I'm not going to say it's some just 100% automated system, but it is style. It's how to be one step ahead of the markets. What does that spike mean? It means they're unloading positions. It's going to start becoming a magnetic price. It's probably going to bounce off of it, come back to it, bounce off of it, come back to it, And like yesterday, we have a magnet price right here on TF. And it does break through the magnet. Okay, actually, it's right up here. It breaks through a little bit, but look how just right around it, over and over and over and over again. And so one of the biggest applications, and this is a sort of an advanced thing I haven't talked that much about. I'm always looking at different ways to apply things. But this is a very ideal butterfly. So, because once you've created a magnet, then, you're hoping that it'll stay around that magnet. And you can go in and you can use that magnet to do range-bound trading. All right, well, I hope y'all learned a couple things today, picked up something new, and just to give you something to be more energized to check out on your charts. And y'all have a great day. I will see you tomorrow, and stay tuned. We have another great show coming up for you right after this.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.